Hey, what's up, guys? Welcome to the Inside View Real Estate Podcast. Today, we're going to be talking about inflation in the real estate market. How big of an impact does it actually have? I want to see you on the inside. Hey, good morning, good afternoon, or good evening, no matter what time it is. Hope that you guys are having an amazing day today. I'm with my host, Josh Zuniga. We're talking about inflation and how it could potentially impact the real estate market.
Yes.
We did have a chance to talk off camera, right?
Like we always do.
We always do.
Yeah.
We kind of, game plan to have these things. So my thought is that inflation might actually ironically bail us out of a freaking mess. Mm-hmm. And here's what I mean by that. And a lot of people, guys, you're watching this and you're like, Carl's full of shit. So here's what it boils down to. Let's say that inflation's at 10%, but the housing prices are only going up 1 or 2% this year, right? Because we've had so much excess, demand and not a lot of supply, and now we're seeing that shift, massively, right? A lot more supply than there was even a week ago. Mm-hmm. I mean, we're going to pass 10,000 listings. So with that increase in supply and that pullback in the buyer's market, but we have a lot of inflation. Ironically, I think it's going to balance itself out. So if you have a $600,000 house now, maybe it comes down to $590, or maybe get, like what you said, 2% concessions.
Yeah.
You're going to see the sellers be a little bit more negotiable. You're going to see houses sitting on the market a little bit longer. But as long as wages come in behind it and fill that back in, so the affordability is there, because what we're seeing is the inflation rate, say that's 10%, cost of goods is going up, so your overall monthly budget is probably shrinking a bit, what you can spend on housing. And with the interest rates creeping up, it's a double-edged sword.
Yeah.
Right? So you're saying, hey, look, not only are the housing prices for the same priced house going up because the interest rates are going up, but the cost of goods and services is also going up, which leaves me less to spend monthly. And that's a really hard thing to deal with. Think about single moms. Think about people that are really affected. A single household income potentially could be a problem, right? Especially something that, they're living paycheck to paycheck. Mm-hmm. It's really going to hurt. But here's ironically where I think it's going to help us out is that normally you would see housing prices raise in a what's a normal market anymore?
Historically,
3%?
Yeah, historically speaking, Arizona was usually 5 to 7%.
Yeah, which is
and
aggressive.
National average was like 3 to 4.
Yeah, so let's just use national average.
Yeah,
just for a macro event, right? So call it 3%. Well, now you're going to see stagnant prices in the housing market, but inflation creeping up, and then the backfill is your wages should be going up, which makes the house just as affordable as it was a year ago, right? And so actually what we've seen in the past couple of weeks is that the mortgage rates have come back down. And so we're seeing the 10-year treasury, the yield on that come down, which is a good thing, right? So we're seeing the affordability come back because the interest rates are coming back down. Housing prices are kind of softening up just a little bit. Inflation is going up, which is going to eat up some of your additional income. But I think we're going to be okay. Yeah. I think we're going to be okay. Yeah. So put it on the calendar. Today's the day that Carl talked about the market being okay, and then either hang me publicly in a year or two, or give me an ass slap and a high five.
Yeah, probably go with the ass slap and high five.
I hope so.
For buyers, I would some relief, some additional relief. I think would obviously be really amazing. To feel that. Yeah. I think what we struggled with, and then you talked about it, is like as the prices go up and as inflations go up for 2 years, prices wages haven't been able to catch up.
No.
Right. So that's the biggest issue, right? The inflation is the issue, but if it wouldn't be an issue if wages would be at the same price or go at the same rate, right? So if we do have that backfill come in with the wages and the actual prices coming down on the home, which we are seeing, you just said we had 10% on last week, 10% of listings saw a price reduction.
Yep.
That is huge. That is insane. Right. And I think a lot of the sellers are,
they're overpriced.
Yeah, they probably are. I think a lot of the sellers majority of them maybe be overpriced, but some of them may be like, oh, something's wrong with my property. I need to get rid of it, because of like what the perception of the market is when you see on CNN or New York Times that we're headed towards a recession, whatever the case may be. I know some investors are maybe offloading some things and sellers are just trying to reposition themselves, take their cash that we have from all this equity over the past 2.5 years, maybe rent for a year and see what happens, after these midterms, and then obviously the election coming in the following year, right? Which is a very valid point, a very, very valid point. And it's a smart one, right? I don't ever discount anybody that's trying to make moves and make adjustments for themselves and for their family and just play the chess pieces, right? You have to be smart and you have to be diligent and you have to educate yourself, like you always say. educate yourself on what's going to be the smartest move for you. And then if you want to wait and sit, great. And then you want to make your moves and put in your little ponds as they may, then absolutely do it. So I do agree with you that we are seeing a difference in the market. And I think the inflation may be helping a little bit. And as wages come up, like you were saying on the last episode, we are expected to have 700,000 jobs come here in the next, 5 to 6 years? Yeah, which is pretty significant.
Phoenix is kind of an isolated, in Tennessee, we're seeing that in Tennessee. We're seeing that in some of the other markets that we're in, right? So, yeah, you got to be kind of understand like what the macro is versus the micro. We're not micro. We're talking about Phoenix.
Correct.
On a macro event, I think that we're still going to be okay, the broader markets. But you're absolutely right. If you're in Phoenix, and I think a bulk of our audience is, I think you're going to be okay. Mm-hmm. So when we talk about should you buy a house, and we've done that episode 1,000 times now.
Yeah. This is just this. We just like reiterate the information and reinforce it, right?
In a different, context. I do think I would rather spend time in the market, and than timing the market. And there's that old adage, spend time in the market, don't time the market. So, even if housing kind of goes down 3-4%, right? And people are waiting for this huge dip. I don't think it's going to happen because there's equity in these homes. People are making their payments on time. Job market is strong. Now, I think the job market did soften up. We could see a change. Mm-hmm. I do think that pretty quickly too.
Yeah.
But we're not seeing that. Strong demand still, pent up demand for years. And so I think we're good, dude. I think we're good.
Yeah.
Any final thoughts?
If you're still on the fence, even with buying, I had a conversation with my client just this morning. They're discussing about like, hey, we got approved and our rate's like a 5.6. And I gave them, obviously, historically speaking, that's still a good rate. And like I said, the rates have cycles, right? They're going to go up and eventually they're going to come down. If we can figure out a program, a loan, a term length, how much you can actually put down, and you're comfortable with that payment, obviously a 5.6 isn't sexy compared to what we've seen over the last 2 years when you can maybe get in a 3.
It ain't going to happen again.
Right.
But it ain't going to happen again.
Right. If we could potentially see in the next 2 to 3 years, as long as you're good with that payment, that you can actually be put into a lower rate, then that may be an expectation, right?
Yeah, but here's what I don't want to have happen is somebody's like, oh, I want to wait for the rates to come down to 4.5. Well, you're going to be dead by then.
You're going to be done. Yeah. You're going to be done. I'm just saying, if you're going to say get in the market, the best time to do it is now, because if you wait, then as prices go up, so is your payment. So you might as well lock in a payment now with a rate now at a price that you can actually afford.
So you hit on something very, very important. Buying a home now is a hedge against inflation. Mm-hmm. Okay, so if you're renting, you are exposed because that lease resets every year. There's a reason why landlords don't like leases longer than a year. Okay, it's because they like to increase rent. Mm-hmm. So if you're paying $2,000 a month now, and then a year from now they're like, hey, it's $2,200. Guess what? You're paying $2,200. Mm-hmm. You might as well pay it, into your mortgage.
Yeah. So, and that's a big thing. Arizona saw a 19% appreciation rate or increase just in rental rates.
Yep.
God only knows what that's going to be now, and it's only going to continue as we have more people move here.
Especially in Arizona.
Rated second as far as inbound migration. So everything, guys, is just pointing towards, Phoenix being a very desirable area to always be in, always live in, always work in, even vacation. Okay. So if you're still concerned about purchasing, I understand where your concerns are, but if you can and have the ability to, do it as soon as you can. Because if you're trying to buy in 2023, with rates and increased inflation and increased prices, you're going to be stuck. And I know within the next 3 to 5 years, Arizona is going to be known as a renter's market. Okay.
Yep.
It's going to be very, very hard for people to buy, especially even individuals that, have 2 years out of college, have a good job, have steady income, and now you have to try and qualify for a $600,000 house as the median home price in Phoenix. Okay. That's reality. It's not going to happen. You're going to be forced to rent, and the renters will lose and the owners will win. So I'm going to leave you guys with that. The renters will lose and the owners will win. So if you have the ability, you have the opportunity, get yourself into a home now, even get yourself into a property, townhouse, condo, get yourself into something so you can start putting that money towards, a better life for yourself and a hedge against inflation.
Yep. Nailed it.
Awesome. Guys, thank you so much for tuning into our episode today. We'll see you on the inside on the next episode. Hey guys, thank you for tuning in to today's episode. Make sure you like, comment, share, subscribe, do all the things. We want to continue to bring value to you every single episode. But until next time, see you on the inside.